For decades, oil was traded almost exclusively in US dollars, cementing America's economic dominance. This system, often referred to as the petrodollar, created a strong demand for the US currency, reinforcing its position as the world's primary reserve currency. But today, that foundation is shaking. The global financial landscape is undergoing a seismic shift, challenging the long-standing supremacy of the dollar. Saudi Arabia and Qatar are forging closer ties with China, joining BRICS, a coalition of emerging economies that includes Brazil, Russia, India, China, and South Africa. They are starting to trade oil and gas in Yuan, a move that could significantly reduce the global reliance on the US dollar for energy transactions. This isn't just about new trade deals, it's a fundamental shift in global finance. The implications are vast, affecting international trade, investment flows, and economic policies worldwide. The world is moving toward de-dollarization, a process where countries seek to reduce their dependence on the US dollar in international trade and finance. As countries seek more economic independence and less reliance on the US, they are exploring alternative currencies and financial systems. Decisions in Riyadh and Doha are sending shockwaves through international finance, challenging the status quo and prompting other nations to reconsider their own financial strategies. This signals a new era of competition and cooperation, where alliances are being reshaped and new economic partnerships are being forged. This transformation is about ambition, strategy, and a rebalancing of global power. Nations are positioning themselves to take advantage of new opportunities and mitigate risks. New alliances, digital currencies, and innovative financial technologies are emerging, reshaping the economic landscape. Massive investments in infrastructure and technology are redrawing the economic map, creating new centers of power and influence. For Saudi Arabia and Qatar, it's about securing their future as power shifts from west to east. They are strategically aligning themselves with emerging economic powers. They're diversifying both their economies and their partnerships, investing in various sectors to reduce their dependence on oil and gas revenues. Understanding this pivot is crucial. It affects everything from gas prices to the global balance of power. The world is watching closely as these changes unfold, knowing that the repercussions will be felt far and wide. To truly grasp the recent moves by Saudi Arabia and Qatar on the world stage, we need to look at the bigger picture. Their decisions are not made in isolation. They're part of a broader shift in global alliances and economic power. Understanding this context is key to seeing why these countries are turning their attention to BRICS. So what exactly is BRICS? It's more than just an acronym. BRICS is a coalition of some of the world's most dynamic and rapidly developing economies, coming together to challenge the traditional balance of power. The group began with Brazil, Russia, India, and China, four nations with huge populations and fast-growing economies. South Africa joined in 2010, making it BRICS. Initially, it was seen as a loose alliance, a forum for emerging economies to share ideas and ambitions. But over time, BRICS has evolved into a powerful platform for countries that feel sidelined by Western-dominated institutions like the IMF and World Bank. These organizations have long set the rules of global finance, often favoring the interests of the US and Europe. In response, BRICS created its own new development bank. This institution funds infrastructure and development projects across member nations, offering loans and support without the political conditions often attached by Western lenders. It's a way for BRICS countries to invest in their own growth, on their own terms. In 2024, BRICS took a bold step and expanded its membership, inviting Saudi Arabia and the United Arab Emirates to join. This move signals a new era for the group, as it welcomes major players from the Middle East. For Saudi Arabia, joining BRICS is about more than just economics. It's a statement of strategic autonomy, a way to diversify its alliances and reduce its reliance on exclusive ties with the United States. This shift reflects a broader desire to play a more independent role in global affairs. Membership in BRICS opens doors for Saudi Arabia to deepen relationships with economic giants like China and India. Together, these countries represent a massive share of the world's population and economic output, offering new opportunities for trade, investment, and influence. For Qatar, the motivation is similar, but also unique. By aligning with Asia's booming markets and strengthening diplomatic ties beyond the West, Qatar is positioning itself as a key connector between regions, ready to benefit from shifting global dynamics. The expansion of BRICS is more than just a symbolic gesture. It's a calculated move to create a more balanced and multipolar global order, where influence is shared more widely and no single bloc dominates. With its new members, BRICS is emerging as a serious alternative framework for global governance, one that could reshape the future of international cooperation and competition. The China-Saudi partnership has rapidly evolved into one of the world's most significant and closely watched alliances. What began as a relationship rooted in energy trade has now blossomed into a multifaceted collaboration that is reshaping the global landscape. China's booming economy relies heavily on energy, and Saudi Arabia remains its most important oil supplier, fueling industries and cities across the nation. But today, their alliance goes far beyond oil. It now spans finance, technology, infrastructure, and even digital innovation, with both countries investing in each other's future. Chinese firms are at the heart of Saudi Arabia's Vision 2030, helping to build futuristic cities like Neom, develop new industries, and transfer advanced technologies to the kingdom. In fact, 6 of the 10 largest construction contractors in Saudi Arabia are Chinese, a testament to the scale and trust of this partnership. Financial ties are deepening as well. A major currency swap agreement now allows both nations to trade directly in Yuan and Rial, bypassing the US dollar and reducing transaction costs. The Bank of China has opened a branch in Riyadh, and the two countries have linked their stock exchanges, making cross-border investment smoother and more efficient than ever before. Saudi Arabia's sovereign wealth fund is investing billions in Chinese companies, from technology to green energy, signaling a long-term commitment to shared growth. The partnership now extends into digital finance. Saudi Arabia has joined China's BRICS project, which explores using digital currencies for faster, more secure cross-border payments. The goal is clear: to create a faster, cheaper, and dollar-free system for international trade, giving both countries more control over their economic destinies. This partnership is no longer just about oil or construction. It's about building the financial and technological architecture of the future together. China and Saudi Arabia are now partners in reshaping global finance, setting new standards for international cooperation. Their collaboration is becoming a blueprint for a new economic order, one that could influence the world for decades to come. The US dollar's reign over oil markets is being challenged. Recent deals have seen oil and gas traded in yuan, including China's first digital yuan crude oil purchase. These transactions, though small, prove energy trade can bypass the dollar. Saudi Arabia and China are discussing more yuan-based oil sales, and Qatar is following suit for its LNG exports. A dual system is emerging, some contracts in dollars, others in yuan. The yuan isn't as freely convertible as the dollar, and the rial is still pegged to the dollar, but new financial infrastructure is changing that. Currency swaps and digital payment systems like BRICS are paving the way. China is methodically building support for its currency's global role. The willingness of Saudi Arabia and Qatar to participate signals that de-dollarization is no longer a distant idea. The shift is underway, and the pace is accelerating. Enter Project BRICS, the Gulf's leap into digital finance. BRICS, led by China and the Bank for International Settlements, aims to revolutionize cross-border payments using central bank digital currencies, CBDCs. Instead of slow dollar-based transfers, BRICS enables instant low-cost payments between countries like Saudi Arabia and China. Saudi and UAE participation brings real-world energy trade into this new digital ecosystem. If oil and gas can be settled on BRICS, it bypasses the dollar entirely. This is de-dollarization at its most advanced, building new financial pipes for global trade. The project is young, but its potential to reshape international finance is enormous. For the US, it's a warning: the dollar's central role in payments is no longer guaranteed. The Gulf is dreaming bigger, considering a single currency for the GCC like a Middle Eastern euro. After years of slow progress, the project is gaining momentum, driven by the global push to move beyond the dollar. Central banks are aligning policies and linking payment systems to lay the groundwork. A unified Gulf currency, backed by vast energy wealth, could rival the dollar in regional trade and investment. It would end dollar pegs and let the region control its own monetary policy. This fits perfectly with BRICS strategies and could inspire similar moves elsewhere. Pricing oil and gas in a Gulf currency would be a major blow to dollar supremacy. The dream is now an active policy goal, not a distant fantasy. These shifts challenge America's economic dominance and the dollar's exorbitant privilege. The world's need for dollars has let the US borrow cheaply and wield sanctions power. De-dollarization, led by BRICS and key U.S. partners, threatens these advantages. Less oil traded in dollars means lower global demand for the currency, higher U.S. borrowing costs, and weaker sanctions. The dollar won't collapse overnight, it's still the world's most trusted currency. But the trend is clear, the dollar's dominance is eroding, and the U.S. must adapt. Even close allies are diversifying their alliances and currency strategies. The unipolar moment is over. America faces a more competitive, multipolar world. The moves by Saudi Arabia and Qatar are part of a global power shift. The old US-led order is giving way to a multipolar world with China and regional powers demanding a bigger role. A parallel, non-Western system of trade and finance is emerging, not to destroy the old order but to offer alternatives. BRICS expansion, new banks, and digital payment platforms are building blocks of this new structure. Countries now have more choices, no longer forced to pick one side. This brings both opportunity and risk, more balance but also more competition and friction. Recent conflicts in the region show the volatility of this transition. The decisions made today in Riyadh, Doha, and Beijing will shape the world for decades. The move away from the dollar is not a blip, it's the new reality. Understanding this shift is essential. The sands of global power are moving, and a new world order is taking shape.